Hello and welcome back to Katie's Business Tips. Here with you, Michael Lapete. We're going to get into a new topic about minimizing tax when transferring shares of a corporation. A lot of times you may want to transfer shares to a spouse, to a family member, maybe to another corporation, to a family trust, and so forth. And our goal is to minimize the tax on those transfers so we don't get hit very hard. And to be honest with you, some of those tax bills are hefty if you don't do it right. So in cases like these, the key is to plan ahead. Get professional advice and plan ahead to ensure that you know what the tax consequences are, if there are any. And typically, the legal fees are going to be set with the lawyer to be able to do these transfers, so there is no tax. You're going to pay legal fees and hopefully pay no tax. And when I say pay no tax, what you're really doing is you're just deferring it. So the shares of your company, maybe your company is now worth $1 million. And you only paid $1 for your shares or $100, but now you got $1 million capital gain. We don't want to pay tax on that to move the shares, so all we do is we defer that gain as we move it, so when whoever has these shares now will claim that full capital gain in the future. So it's not that we're saving the tax, we're really just deferring the tax in most situations. Okay? Now, some tips you can consider when transferring the use of your corporation is you can also use your capital gains exemption. So you can defer it or you can claim it and claim your capital gains exemption today. Now, we do have other videos on capital gains exemptions. We're close to $1 million in capital gains exemption on the sale of qualified small business shares. That's per person for life. And at the end of the day, we can use that when we're transferring shares, claim that now, get it out of the way, because if we crystallize it now, we use it up now, and then there's less gains to pay in the future. Okay, it's actually a very good strategy. Another thing is you can also look at doing what's called a rollover. And when you roll over assets, you will just basically move over those shares to someone else or to a trust or to a corporation, and in lieu take something back. It may be a promissory note, it may be preferred shares, but it's almost like a swap. You're rolling it over and you're deferring that tax. Okay, that's one of the key things that lawyers use when they're transferring shares of a corporation. Now, when we're doing this with a family trust, it can also be done exactly the same way, and it can be done with a family trust to freeze that. And when I say freeze, they're just freezing the value of those shares today, right? And then you're probably using a rollover or other sections of the Income Tax Act. There's things called butterfly transactions, rollovers, Section 85, Section 86. These are very complex topics. I will get into them at some point in a small video series, but for today, just know that really what you're doing in these transactions, again, is deferring the tax in most cases. And at the end of the day, if we can crystallize some of that, though, using the capital gains exemption today, we will do that. Remember that a trust can multiply that capital gains exemption times the number of beneficiaries at will. So that's very important. And then the other thing we can do as well is we can definitely do it over a period of time. We can transition shares over a period of time and use reserves to extend the tax so it's not all paid at once and it's paid over time. So that is another way to transfer shares of a corporation to minimize tax. Very complex topic, very short summary, but some good nuggets for you. If you have any questions, do ask, and we'll look forward to seeing you in the next video.